Good morning, students. Today we are going to revise the third unit of economics, that is money and credit. And here we all have studied already, and I hope that you all have read the lesson twice or thrice and will be well versed with that. So, what all the major things that we are seeing in this lesson is money and that related system, and what is the older method of method that was used in order to avoid using money in the olden days. It's barter system. Barter system is nothing but the system in which goods are exchanged for other goods, right? And what were the limitations that we see in the barter system? It is lack of coincidence of wants, difficulty in storing value, different payments, and deferred payments are difficult because what we need actually will not be there with the other person, or what we are having will not be needed by the other person, right? So deferred payments are difficult, and finally some goods are indivisible, and then only slowly the money was introduced. And money, what is the definition for money? Money is anything which is used as a medium of exchange, store of value, and standard of deferred payments, and that is only said to be called as money. And now we can see what are the major things, functions of money: medium of exchange. Instead of waiting for double coincidence of wants, we can able to purchase whatever we need, or we can sell whatever we are what we want to sell, and we can get the money, right? And next, store of value. We can save the money, but we cannot able to save the goods that we got in double coincidence of wants. In case if you are getting a vegetable, can we able to store it? No, right? And next thing, money is a standard of deferred payment. Why? And it is an agreed unit of measure that enables people to contract for future payments and receipts. Okay. And here now we are going to study about the various forms of money. So in the olden days, there are many olden forms of money. What are the things you could see here? Various forms of money, right? And the coins they were used, and what type of coins they were using: gold, silver, copper coins. Okay. And then now the modern forms of money, what all the what it is included mainly, it is currency notes, paper notes, and coins. Okay. And who is the only authority who can print the money in India? It is Reserve Bank of India. Okay, it's RBI. And what all the various ways other than money you could transfer the money without giving it directly as cash? It is the other forms of money is DD, checks, right? And other than that, bank transfers, and now online payments also. And what is the role of a bank? So normally bank we are depositing the money, and they are giving few interest for that, and the money that is deposited by us will be given as loan to other the people in need, and they will be getting more interest for that. And in that interest amount only, they will be meeting up all the expenses of the bank, and they will be paying the salary for the bank employees. And other than that, with that money only, they are giving us the interest for our deposit. Okay. So normally bank used to give loans. What all the different major loans that bank gives? Under that, various loans are there: personal loan, business loan, mortgage loan. Under personal loan, we are having a housing loan, or whatever it is, right? And in business loan, various businesses. And in the same way, mortgage means vehicle loan. Okay. Next, cash reserve. We are saving our money in as cash in banks. And now we are going to study about credit. Credit is nothing but loan. Loan refers to an agreement in which the lender supplies the borrower with money, goods, and services in return for the promise of future payment, right? And what all the thing that is needed for getting a loan or getting a credit? So what are the things we have to produce? First thing is collateral security. So what property we are having, that documents we have to submit. And second, documentation. Various forms and documents they will be having. We have to sign, we have to fill and everything. That process we have to do. And next, terms of loan. Terms of loan in sense, for this, if you are providing a property, for this property this much loan only can be taken. In that way there are some terms. And mode of repayment in sense, and terms of loan also include in how many years we are going to pay that. And mode of repayment means we are going to pay it through cash or through online transfers. And what is the rate of interest, for how much money we are getting, under what rate of interest we have to pay for that loan every month, right? And these all the things are various important things. And importance of credit for farmers in rural areas. So normally farmers, they need credit, they need loans to buy what? Seeds, fertilizers, pesticides, electricity and equipments and various things. And but one problem, one main good thing is what? There is a minimum period of 3 to 4 months only. Within that time they will cultivate and harvest, and they will sell the crop, and they will get the money back, and they can pay the loans in a very short time. And that is also a very profitable, a very important thing. And farmers usually take crop loans at the beginning of the season and repay the loan after harvest. Okay, so this is a thing that we are learning. And now we are going to learn, we have studied about credit loans, but there are two types of credit. What is formal source of credit and informal source of credit? Formal source of credit means what? The loans that we are getting from commercial banks, cooperative societies, regional, rural banks constitute the formal sectors of credit. And all these banks are supervised by whom? The Reserve Bank of India. That is the highest authority of India, and that supervises the functioning of formal sources and also the formal source of loans also, right? And they were the only people, they collect very low rate of interest, these banks. And these people, they follow well defined rules and procedures. That is the reason everyone cannot able to get loans in banks, because we have to follow all the five things that I have said before, right? And informal source of credit. And here, what are the informal source of credit? The loans that we are getting, loans are the money that we are getting from money lenders, traders, employees, even your relatives and your friends or neighbors, right? All this comes under informal source of credit. And these people are not, there is no organization for them, and no one will be supervising the credit activities of these lenders in the informal sector. And these people, what they will be doing, they'll give you 1,000 rupees and they'll ask you to pay 1,500 rupees within a month. If you are paying means 1,200, or 2 months later means 1,500. In that way they will be collect high rate of interest, and they do not follow any rules or procedures. Okay. And source of credit in rural areas, you all know, in rural areas and all, most of the people, they will get loans or get money from various sources. First thing is, 30% of the people will not be having any land or anything, so they will be getting money from money lenders and some other informal sources like from relatives or from neighbors or friends. 18% people will be getting, and cooperative societies, through which 27% people will be getting, and from banks 52% people will be getting the money or loan. And credit in urban areas, and all, most of them are landless, and they will be going for daily wage work, and they will not be having any source to provide. That is the reason most of the people are poor, and the poor takes 85% of credit from informal sources, and only 18% of the people get loans from banks and other formal sources. And most of the rich people take more than 90% of loan from formal source only, and that is the reason. So formal sources mostly serve the rich people. Why are the banks not advancing loans to the poor people? Because I already said you, poor people do not have anything to offer us collateral security. Banks do not available in many rural areas. Banks do not consider the poor people as credit worthy, and poor and ignorant people find it difficult to produce the various needed documents for documentation. And now we are going to learn finally about self-help group. In Tamil we used to say it as Suya Udavi Kulukal. And here the self-help group means normally it will be in the rural areas, and a self-help group has, even in many areas we could see, it has around 15 to 20 members, and mostly women of the neighborhood will be the members of it, and each member contributes some money every time, and the members can get small amount as loans from the group, and the rate of interest is also low, and whether to give loan to whom and everything will be decided only by the members. And if the self-help group is running successfully for more than 2 years, after 2 years the group can get loans from bank. And what is the importance of self-help group here? Members can get loans at low rate of interest. Second, the group will encourage the members to find self-employment. Members can discuss and act on many social issues such as health, nutrition, domestic violence, and all. And finally, banks will give loans to self-help group without any collateral, without any property or anything. So this is what we are learning in this lesson, and this is how the lesson gets over. And I just want you to prepare everything. And from today onwards, I will be posting one question paper in the as a homework, and you have to study it and you have to write it and you have to send it as homework. Okay, students. Anyway, thank you. Have a great day.